At just 18, he became one of the youngest Bitcoin millionaires in history. 7 years later, his empire collapsed in less than a week. In early 2017, Erik Finman was the face of a new generation of crypto wealth. A teenage prodigy who had turned a $1,000 gift from his grandmother into millions, Finman seemed untouchable. He had media appearances, flashy outfits, an ever-growing Twitter following, and the kind of bravado that made headlines. At a time when Bitcoin was skyrocketing and the world was hungry for tech disruptors, Erik Finman became a symbol of everything crypto promised: freedom, rebellion, and fast, unimaginable wealth. But underneath the hype, cracks were forming. Finman's journey started with a simple act of defiance. At the age of 12, he took a $1,000 gift from his grandmother, money meant for his college education, and bought Bitcoin, which was trading at around $12 a coin. By 2013, his investment had grown exponentially. But it wasn't just about the money. Erik had a grudge against the traditional education system, claiming he was bullied by teachers and misunderstood by peers. He made a deal with his parents. If he became a millionaire before 18, they wouldn't force him to go to college. And by the time he was 15, he was well on his way. In 2014, Erik launched his first startup, Botangle, an online education platform funded entirely by Bitcoin profits. Just a year later, he sold the company for 300 Bitcoin, worth about $60,000 at the time. That sale would later prove critical. When Bitcoin surged past $20,000 in late 2017, those 300 coins made him a multimillionaire. He had achieved what he set out to do before even finishing high school. Mainstream media couldn't get enough of him. CNN, CNBC, Time Magazine, everyone wanted to hear from the teenage crypto wizard. He was young, rich, and brimming with confidence. Finman leaned into the image. He wore gold suits, posted memes mocking Wall Street, and projected himself as a tech-savvy outsider who had hacked the system. He even made appearances with celebrities, rubbed shoulders with politicians, and made bold proclamations like, "I'm going to build the future." To many, he was a genius. To others, he was just a lucky kid riding a bubble. But Erik didn't stop at Bitcoin. Flush with millions, he began diversifying, at least in his own way. He poured money into side projects, a cryptocurrency called Metal Pay, a space travel initiative, and even an attempt to reinvent education with VR classrooms. The problem was, most of these projects were driven more by ego than clear business sense. He lacked infrastructure, mentorship, and accountability. Many of his decisions were made impulsively, often in public, often on Twitter. As the crypto boom peaked, Finman's confidence inflated with it. He started burning through cash quickly. He flew private. He moved between luxury apartments in San Francisco and New York. He bought a warehouse to build a tech lab and staffed it with friends and internet acquaintances. Multiple insiders later claimed that the workplace environment was chaotic and directionless. Projects were launched with no clear roadmap. There were internal power struggles. And while Bitcoin cooled off in 2018, so did the hype around Finman. By mid-2019, Erik admitted publicly that Bitcoin was dead. The statement shocked many and alienated much of his core crypto audience. What he meant was that Bitcoin had stagnated and newer blockchain technologies were more promising. But the backlash was immediate. Investors started to question his judgment. Some of his partnerships quietly fell apart. Despite the flashy public image, his liquidity was drying up. Meanwhile, Finman was still spending. He launched a new brand, rebranding himself as a kind of Gen Z Elon Musk. He pitched himself as the cool billionaire, combining crypto, fashion, and pop culture. He launched Capsule, a futuristic smartphone designed to break up the Apple and Android duopoly. But the product failed to gain traction, riddled with design issues and poor reviews. Critics called it a vanity project. Behind the scenes, manufacturing costs spiraled out of control, and several early investors backed out. By 2021, the cracks had widened. Metal Pay, one of his key investments, was struggling with regulatory pressures. Capsule was essentially dead, and with crypto markets entering another period of volatility, his net worth, which had always been mostly on paper, was fluctuating wildly. Multiple sources close to Finman said that his once huge Bitcoin holdings had been significantly liquidated to fund failed ventures. Others claimed he had taken out risky loans using crypto as collateral. When the market dipped again in mid-2022, liquidation events wiped out a significant portion of his remaining assets. Yet despite the turmoil, Erik maintained a public face of confidence. He continued posting online, giving interviews and making predictions. But insiders say that by late 2022, the empire was effectively hollow. His staff had been cut to a skeleton crew. Several of his side ventures were quietly dissolved. His luxury warehouse lab, once touted as a futuristic hub, was abandoned. Multiple sources confirmed he had moved back into his family home in Idaho. What made Erik's fall even more dramatic was how fast it happened. Between late 2021 and early 2023, his fortune, once estimated in the tens of millions, evaporated almost entirely. It wasn't one mistake, but a series of ego-driven decisions that compounded over time. He had no board, no advisors, and no institutional safety net. He had built his world on hype and momentum, and when that ran out, everything collapsed. But Erik Finman's story isn't over. While his name no longer carries the same weight in crypto circles, and while his days of flashy self-promotion have quieted, he's still active behind the scenes. Some say he's quietly regrouping, looking for a comeback. Others believe he's permanently burned too many bridges. What's clear is that the same ego and vision that made him a millionaire also played a central role in his collapse. In part 2, we'll dive into the final days of his crypto empire, how a few key decisions unraveled everything in just a week, and what he's doing now that could either redeem him or bury his legacy for good. In early 2023, Erik Finman was still holding on. Publicly, he maintained the image of an unbothered disruptor, but privately, the pressure was mounting. Metal Pay, once his flagship crypto project, was in legal limbo. Its banking partners had pulled out, citing concerns over compliance and viability. Regulators were increasing scrutiny. Investors were asking questions he didn't want to answer. And Bitcoin, his original golden ticket, was stuck in one of its most volatile periods since its inception. It wasn't just that the price was down. It was that Finman had already sold most of his holdings, some to fund projects, others to cover operating expenses. A significant portion, it turns out, was used to maintain his lifestyle. Private jets, luxury rentals, flashy marketing campaigns. He never diversified outside of tech. There were no real estate investments, no equities, no safety net. Nearly all of his personal wealth was tied to crypto, and crypto was crashing. The real tipping point came in March 2023. A leaked internal memo from one of his projects, Capsule, revealed that the company was insolvent. Finman had been trying to raise new capital to revive the failed smartphone startup, but venture capitalists were no longer biting. The market had shifted, VCs were pulling back, and Erik's name no longer carried the charm it once did. Instead, his reputation as reckless, unstructured, and overconfident was now a red flag. Former collaborators described a founder who ignored advice, changed direction on a whim, and spent more time cultivating his personal brand than building product. Within a week of the memo leak, Erik lost 3 major private investors who had backed multiple ventures. At the same time, a separate lawsuit was filed by a former contractor claiming unpaid wages and breach of contract. The story hit the tech media hard. The narrative flipped overnight, from teen crypto prodigy to cautionary tale. That same week, one of Erik's crypto wallets was flagged in a mass liquidation event. Online sleuths discovered that a loan he had taken out months earlier, backed by Ethereum and Bitcoin, had been margin called after a sharp price drop. His positions were forcibly liquidated. The loss? Estimated at over $6 million. Some of it wasn't even his. Insiders suggest that pooled investor funds were used as collateral. If true, it bordered on legal and financial disaster. In just 7 days, Erik Finman lost almost everything: his capital, his credibility, and his remaining investor support. His warehouse lab was sold off in an online auction. His startups, Capsule, Metal Pay, and several unnamed ventures, were either shut down or absorbed by creditors. Most of his digital presence went silent. Twitter, which he once used to troll billionaires and brag about owning the future, went quiet for months. No posts, no statements, just silence. But what made Erik's fall even more fascinating was the fact that he had always warned about this exact scenario for others. In his earlier interviews, he spoke of traditional finance as fragile, mocked startup founders who sold out, and claimed the future belonged to fearless youth like him. But when the crash came, Finman had no defense. He had alienated too many potential allies and built too little actual infrastructure to recover. Still, not everyone abandoned him. In mid-2024, Erik made a low-profile appearance at a blockchain conference in Austin, Texas. Gone were the gold jackets and cocky one-liners. He looked tired but composed. In a short speech, he didn't make excuses, but hinted at a new phase. Something smaller, quieter, more focused. He said he was working on fixing the mistakes I made in public, privately. Some in the audience applauded. Others were skeptical. Was it humility or just another pivot? Since then, he's been spotted in closed-door tech meetups in Miami and Los Angeles. A few former allies say he's working on a new project, this time with a co-founder, a team of advisors, and a less ego-driven mission. But nothing has been publicly launched yet. His name doesn't generate headlines anymore, but among certain tech circles, there's still curiosity. Will Erik Finman stage a comeback? If he does, it will need to look very different than his first act. The rise and fall of Erik Finman isn't just a story about crypto. It's about timing, ego, and the illusion of invincibility. He won the lottery of early adoption, but never learned how to manage the winnings. His collapse wasn't caused by one decision, but by 100 unchecked ones made in an echo chamber of hype. And when the hype died, so did the empire. But in tech, especially in crypto, people love a comeback. The question is, can someone who lost everything in a week and built it all on bravado really rebuild something that lasts? Or will Erik Finman remain just another footnote in the chaotic history of crypto's first generation? What do you think?